Hello, everyone. Welcome back to my channel. This is Easy the Present. Today, I have a video about risk to reward for you guys. And in this video, especially, I want to explain why risk to reward is like so crucial. You might have heard about the term, you might not really even understand what it is. And in this video, give me some time. I'm going to break it down to you and make a case for why risk to reward is the holy grail of trading, at least trading forex. So risk to reward is an interesting concept. I think it's interesting in the market that you can look for more than you are risking. So people usually typically even go for negative, negative rewards. Like let's say you are risking $100, but you're expecting to make $70, for example, right, on a trade, or you are risking $100 and you are expecting to make $90, right? That's negative. That's a negative risk because you are risking more than you are looking for potentially. But if you are risking $100 and you are expecting on a trade, you maybe your stops are 2 times away from the entry as it is 1 time from as your stops are 1 time from the entry. For example, like your take profit is twice away from the entry and your stop loss is maybe like half that, right? That means you're risking 2:1. So maybe you're risking $100 to make $200. You're risking $400 to make $800, for example. That's a 2:1 risk to reward ratio. And if you are able to break down, and in terms of forex, if you're able to break down the pips that you can gain and divide them by the pips that you can lose max, right? If you're able to do that, that's where you're able to calculate your risk to reward. So that's just a brief background of what risk to reward is and how changing your risk to reward can substantially change your trading rewards and reward. And I have this article from Second Skies Trading. I think they make very good points. Obviously, I'll link the article down below. It's a masterpiece, and I just want to show you guys a few stats from it. Like number one, they looked at an FXCM study, and FXCM is a very big broker, very big in the UK, very big all over the world, certainly in the USA. But FXCM is one of the best brokers. And FXCM conducted an analysis. Let me try to read what it says. In a highly fascinating study, FXCM did an analysis of traders who had negative risk, right? Those people who are risking more than they'll get, versus traders who had a one-to-one risk to reward ratio, for example. And I even if you ask me, I think one-to-one risk to reward is not the best. If you are risking $100 to make $100 and you're doing that consistently, most trading strategies have like a win rate of about 50%. So you are actually going to lose money, and we'll see that on the chart below. But fortunately, the study wasn't just done on people who had one-to-one risk. It was done on people who had a reward ratio of higher than that. And it goes on to explain what risk to reward is. And if you look at the FXCM study, right, and you can see this graph, it says that those with negative risk to reward, right, they had only a 17% chance of making money. Just think about that. Like you already come into the market is hard as it is, and every day there's a different news event. Just this past week, we've had Russia and versus Ukraine change the market so much, and even like mess up with like lots of technical analysis. And it can happen anytime. It can happen in election times. You have CPI. You have so many news events. Okay, so it's not always that even technical stuff matters. And also, your technical strategy can never be 100% initially. And the market itself is hard, right? So you come into all of this, and now you are looking for negative risk reward, and you are even doing from the start that you only have a 17% chance of making money, for instance. That's crazy. And I think if anyone wants to consider what risk reward really is, they'd probably move away from all of those signal groups, especially who give you trades that are like negative risk reward, because a negative risk reward will usually have a very high win rate, maybe 80% and so on, right? But that comes as a cost, and it's just not the best. Um, and the study, let me continue the study. It says, meanwhile, if a trading strategy had a one-to-one risk to reward ratio higher, they had a 53% chance of making money, right? So, of the bad people who are having a better risk to reward have a better chance of making money, 53% chance of making money, which is exactly what you guys want to do in the market. And this is why uh, you don't have to use any strategy that has negative risk to reward. In fact, any strategy that has a negative risk to reward, it you should almost always run away from. You should almost always run away from. And the only exceptions would be if it has such a high, um, win rate, for example, like maybe it's like 95%, and it's very hard to find a trading strategy that's even that high, to be honest. Like it just is, and it's supposed to be. Like the market is so random, you can't have something that predicts the market 95% of the time. I don't think. I like to see that, but I don't think so. So over that, you have people. It goes on to say you have people who if someone is having a positive risk to reward, we should have like more than three times the chance of no, someone who has a negative risk to reward has more than three times the chance that someone who has a normal positive risk to reward of making money. And this is why people mainly, in my opinion, lose money, right? This is the main reason why people lose money, because maybe many people are in the market and they're unable to find good trades. They're unable to find strategies that have good risk to reward, and that is something that my channel helps solve. We have strategies that emphasize good risk reward, for example, and we are just making sure that in the long run we are not going to lose money. If you look at all my strategies, all the strategies I promote, or I have promoted, and I'm not going to say every strategy if you just slap risk reward, although it's very close, that if you do slap a risk reward, it significantly benefits your chances of being profitable. But I'll say every strategy that I have promoted, for example, has a good risk reward, for example. And even when I take my simulations and I'm showing you guys and we are losing certain trades, we can see that in the end we have a positive outcome, which is what you want in the end. You want to be a winner in the end. And as time goes on, you'll be building and building and building, and accounts will keep growing, which is the exact aim. And I like this part again. It says this is the part two, trading statistic risk of ruin, right? And we have a lovely chart. But before that, let me read something. So originally designed for casino games, the risk of ruin, right? ROR is one of the most important trading statistics you need to know. For sure, you need to know this. Let me go on and say the risk of ruin statistic basically looks at your overall payoff ratio, right? Like how much you are going to get from a trade. It looks at that overall, and after a few number of trades, like about a few number of interactions or impressions, because if you are in the casino, it's probably not a trade. After a few number of trades, maybe 100, it could even be 1,000, depending on how whoever is conducting it. After conducting the experiment based on how much you are expected to make and your win rate, for example, right? We are able to chart and see how much people will make, right? And this is where things get interesting, because if you look here, right, we have the win ratio, right, of 10%. That's like very bad. And if you have but the it's possible for a strategy to be having 10% win rate and still be profitable, actually. And that goes to that has to do with your risk reward. Of course, if you have a 10% win rate strategy, you have a very unlikely chance of like winning money. It says like the payoff rate, right? Like if your risk reward is 1 to 1, let's say you risk $100 for another $100, your win rate is 10%. You have like almost 100% chance of blowing your account, 100%. And even when you even raise the risk to reward to 5:1, right? Again, it's still 95%. So that shows you that risk reward, as important as it doesn't stand alone. Like win ratio is also very crucial, right? And then we have again, if your win rate is around 15%, very likely chance of blowing your account, 20%, again, a very likely chance to blow your account. But look, so when you have a 20%, win rate, and then your risk reward is what, 5:1, for example. 5:1, you have a way less likely chance to blow your account, lose all your money. Then it comes 25%, and then from 4:1 risk to reward onwards, you have zero chance of losing money. And then it comes to 30% again, right? Then from 3:1 comes to 35% is what, 35% is still like 3:1, 40% is how do you say, 40% from 2:1 going, right? You don't lose money. And this is where I think most people lose their money, because most people have most trading strategies, and it was based on a different study I read, that most trading strategies that people employ have like a 50% win rate, right? So most of the times it's like, it's as good as a flip of a coin, right? If you were flipping a coin, heads or tails, heads or tails, heads or tails, and I'll go through that kind of trading strategy with you guys. Heads or tails, heads or tails. For example, 50%, and you had your risk to reward on, and your risk to reward was 2:1, right? 2:1. Let's say your risk to reward is 2:1. You have a 0% chance of blowing your account. Now, obviously, you can't just like choose to trade just anywhere. But this is a good experiment, and even saying that a coin, for example, a coin is a better predictor, and also it's not just the coin is able to predict better, but for example, it's able to tell you, it's able to tell you help you make more money, especially if you have your risk to reward right, 2:1. And that's why I usually advise that people, especially who are using my strategy, should use a risk to reward of at least 2:1. Because most strategies are like 50%. Whoever you are, if you have a good strategy and it's a functioning system, if you're able to if I'm able to guess, it has like a win rate of about 50%. That's a win rate about 50%. Just have a 2:1 risk to reward. It's that easy. And for me, there's one big modification that I make, and that modification that just doesn't only change your risk to reward, but it also changes your win rate, and it actually improves your win rate, which is if price moves as much as you've risked. That's how I do mine. If price has moved as much as I risk, maybe it has moved 90% as much as I risk, or even 100%, or even 80% sometimes, right? I move my stop loss to break even. You do that, you move your stop loss to break even, now you're in a risk-free trade, you are free. Okay. So your chances overall of blowing an account, as long as you're not over risking, for example, if you are using a consistent risk to reward, a consistent amount of risk, which is what the article and the one who did the simulation is, where they were always risking 1%. In this instance, right, you have a 0% chance of blowing your account. So it's just that simple. Be consistent in how much you are risking, have a consistent strategy, and risk less than you win. If you win, make sure when you are winning big. Let your runners run. And this is how one way you can make those changes and improve your trading journey. This is a very good article. I think beyond that, they talk about trading strategy and durability, and they promote their course. So if I'll link the article, if you want to look at it, you can. I'm not advocating you buy anything yet. You do that on your own. Trading is risky and nothing is guaranteed, but I think you have a better chance if you have a risk to reward of more than 1:1, 2:1 for me. Not even 1.5, but 2:1. And I hope that you guys can get something out of this video, for example. And if anything, you should keep this chart, this picture in your mind when you are trading. And when you are setting your stops and managing your risks and trades. And so I wish you guys all the best. If you like this video, definitely give me a like and subscribe for more content. I'm here to help you with your trading journey and make sure that more people start making money in the forex market. So without further ado, I'll say happy trading.